Bernard Arnault, the owner of luxury behemoth LVMH, saw the sharpest decline in his wealth in 2024 compared to any other billionaire on the planet. But that was only until the last week of September. Then, in a sudden change of fortune, his net worth soared, propelling him to greater heights once again. But what made Arnault's wealth jump billions of dollars in a day? Stay with us to find out. The LVMH owner lost a massive $24 billion in 2024, more than any other billionaire. This drop happened as the Chinese economy continued to struggle. But how is his wealth tied to China? Arnault, who owns nearly half of LVMH, the luxury giant behind Louis Vuitton, Dior, and Tiffany Co, relies heavily on Chinese consumers. Around 20% of LVMH's global sales come from China. As China's middle and upper middle classes have grown, they've become a crucial market for luxury brands. Now, while in good times this mega market is good news for luxury brands, in bad times it also hits brands sold by the likes of LVMH hard. In 2024, China has been facing its toughest challenges since the Maoist era. The country's growth has stalled, unemployment is high, and the housing market is collapsing, shaking public confidence. Global agencies expect China to fail to meet its 5% growth target for the year, calling it an ambitious figure. However, Chinese policymakers are trying to jumpstart the struggling economy with a supercharged stimulus package. Simply put, China has announced steps to help boost growth with a focus on getting people to spend more. Among the measures unveiled on the 24th of September, the People's Bank of China, the country's central bank, has cut interest rates, lowered the amount of cash banks must hold in reserve, and taken steps to reduce the cost of existing home loans. The Chinese central bank expects the move to inject around $1 trillion yuan or $142 billion in long-term liquidity into the financial market. People on the streets of Beijing welcome the new measures, but with some skepticism. Now, to allay the skepticism, Chinese policymakers have gone a few steps further. Various Chinese cities, including Shanghai and Shenzhen, have eased home buying rules to boost housing sales. The Chinese central government is also planning to hand out subsidies to citizens to replace their old vehicles, equipment, and appliances with new ones. This razor-sharp focus on reviving consumption has triggered a euphoric reaction across China's equity markets. Chinese stocks have witnessed one of their best runs in almost a decade and a half. This euphoria has also had a huge impact on shares of Bernard Arnault's LVMH, as investors expect the stimulus measures to revive China's hunger for luxury goods. During the 23rd to 27th of September trading week, LVMH shares jumped almost 20%, and that translated to Bernard Arnault's net worth once again rising above $200 billion. Do you think China's economic stimulus will successfully boost luxury spending? Why or why not? Let us know in the comments. Also tell us if you want us to do an in-depth analysis of any other economic issue.